Okay, hello everyone. Welcome to this week's study session. Let's start off as we do every week and take a look at the risk model, which is still on that buy signal, November 9th, of course. And you can see the general market up, down volume, new highs, new lows, all positive with stock participation still neutral. It's been, a pretty mixed market as far as the individual stocks are concerned. Some are working, some are having a tough time, but on balance, things are working. We'll go into that in just in a few minutes here. Taking a look at the long-term trend model, still solidly bullish, up 33.64% since the buy signal, going back all the way back to March, April. And of course, just prior to that on the pullback after that first move up, I might as well get my pointer. That would be a good idea. Let's see, where is that little sucker? Let's see. Sorry about that. Trying to find this thing. There it is. Um, so yeah, when we had this pullback right here, I actually recommended going 50% invested in the SPY for your 401k longer term money. I know some of you have asked if I actually have that longer term money and if I trade this way for my own self, my own portfolio. I don't. I've had times where I bought the S&P 500 when it was down big and did take a position. But no, I trade stocks, individual stocks. I'm pretty much a purist as far as that's concerned. But again, if you have that money that you're in your 401k, I do have a 401k. I keep it mainly in cash and fixed income. But this is a great switch signal to keep you in for the big moves and out during the bear markets. I'm going to go into a little bit about risk models and so forth, because two things. One, I want you to understand exactly what they are and why we even report them. And second of all, I want you to understand the limitations or the fact that I really, to be honest with you, I don't trade really at all based on any risk models or any of these models, except they do give me a degree of perspective. So, for instance, when the fundamentals are really strong for the market as they are now, this is what we call our bear market markers. And this is a purely fundamental model that goes all the way back to the 1980s. You can see the buys and sells. It's a very long term model. And you can see that this has been on a pie since coming off the lows in '09. So this just means that the fundamentals, all right, when you look at the fundamental, the economic backdrop and so forth, valuation, interest rates, sentiment is involved in this. Has been bullish for the market for a secular bull market. So that just means that when we get these corrections, we're looking at them um, as cyclical events within a secular uptrend, and we're looking to buy those. It doesn't mean that we're invested and we're sitting through. I mean, you certainly, if you were to trade this model, you would have done well. Buying, say, the S&P 500 when it's on a buy and selling it when it's on a sell. But still, maybe you would have made, I don't know the exact return per annum, but 15, 20% per annum, even if it's 25%. I'm looking to do better than that with trading individual stocks. But this is something that I do talk about from time to time, the bear market markers and the fundamental backdrop, and I blend this with the long-term trend model, which again is going to do a really good job of keeping you on the in the in the big picture on the long-term trend and keeping you with that longer-term trend. You can see the switches are pretty infrequent, again. The two of these, like when you have the fundamental backdrop that is solidly bullish, and you've got the trend is bullish. You're talking. Don't fight the Fed, don't fight the tape, don't fight the fundamentals. So you want to be looking to buy stocks, and that's the situation we're in now. We've got data for the trend model going all the way back to the 1920s. So this is a technically based indicator. Real quick, when we look at the cycle work, we're expecting a pullback, coming up fairly soon. But again, and then maybe a sideways move. What the cycle work tells us that 2021 should come out in January in an uptrend and then correct, and then maybe have a period of basing, which that might set up a nice period where we can get a lot of stock setups. And then you can see here another move up, and then we move up into the middle part of the year, and then that's where cycle work tells us that we're going to have trouble in the second half of the year. So that could bode well for a nice opportunity to make some money in this market. But so far, things are going fairly well. The one thing I want to point out here, and that is that, again, I'm making my decisions on what I'm doing in the market almost purely on the individual stocks. I show you cycle work and I show you all these things that we look at. Sentiment I does play a role, though. I have to tell you that at very extremes, I start to look, at the opposite side of the coin, if you will. If sentiment is really bullish, then I start getting a little bit. My foot gets by the door, if you will, like right now. But it can go on for a long time. You're not going to trade off of sentiment indicators or any of these longer term indicators. You have stocks that are breaking out of basis and they're working. You stick with it. You stay with it, and you keep trading, because there's times where you've got markets that are doing pretty poorly and or moving sideways or slightly down in a correction, and you've got stocks setting up, high alpha stocks. So stick with the stocks. And again, looking at, if we're going to look at indexes, the FFTY is one that I've been keying in on, because it really, first of all, it's only 50 stocks, so it really is a very narrow index. It's really representing individual stocks as best that you can. That would, I say, mimic sort of what you're going to feel in your own portfolio. And this is sort of agreeing with what I'm seeing in a lot of individual names, where I'm seeing a lot of stocks that have run up, and there's a lot of extended names. Although I have to say, this week I still see some setups. I'm pretty surprised, as far as there's a fairly decent number that are set up in bases ready to be bought or buyable, I would say. And there's a lot on my watch list. So maybe this keeps going, but we're definitely getting into the nosebleed section of the stadium, if you will, at least on a short-term basis. If you look here, you can see that these are moving. This is the percentage away from a moving average that the index is, and whether you measure the 20, the 50, or the 200, we're pretty much at all-time high since this index started. So we're stretched here a bit, and we've got sentiment that's pretty bullish, although it's not totally extreme. It's in that neighborhood, and so basically the same situation that I've been talking about. And the good news is that we're not like melting up and it's getting too exuberant. We pull back a little bit and we're kind of just inching up. That's good. That can maintain itself for a while, because the moving averages will catch up. Of course, you won't get too extended in the short term. But right now, again, if we were to run up from here pretty rapidly and sentiment was to get even more bullish, I would look at that as probably a selling opportunity. Looking back, I've seen a few periods like this, particularly when I go back and remember the 1999 period. This is looking at the most recent, of course. This is the NASDAQ in 2020 going to 2021. You can see, I mean, this is such a V recovery. Holy cow. I mean, just straight into new highs with no pullback whatsoever, as far, for most of the time, except this brief consolidation here. This is what I've been talking about since going back, I guess, March, April of 2020, of a lockout rally. And it just continues. The last time I saw something like this, I think was, or something that really, I think, parallels to it would be 1999 into 2000, which is a scary thing because, of course, we went into an incredible bear market after that. But keep in mind that we went up right off the lows 98, and I think that this particular decline that we just saw, this quick waterfall decline that we had from the COVID situation, reminds me of 98. Maybe you could say the crash of 87, because it was a real meltdown. To me, it reminds me of 98, and the recovery reminds me of a similar recovery as well. This went in 98, 99, and then right into 2000. It went much further than anybody expected, including me. I had a great year this year. I was up 220% in 1999, but I booked it pretty early. I really got cautious mid-year, and then the market the NASDAQ in particular just blasted off. I think the S&P didn't do much, but the NASDAQ really melted up there. So that's what I'm talking about. If we get some type of melt up, I would sell into it. Now, the sentiment the bulls have come down a little bit, even though we're still above that 60% mark, which is sort of the red flag zone. Even 55, you start to take a look at what's going on and get your foot by the door. But you get above 60, every few percentage points above 60 really is a big deal if the market is running up. And if you get 65, and above, now you're really into it's a real red flag. So we're close. And that's what happened in 2018, where we ran up and we got up to that 60, I think it was 67, 68% of bulls. So we're just watching this, but sticking with what's working. Ned Davis has a sentiment indicator where they follow 30 sentiment 30 sentiment gauges and then weight them. And right now, about 74, 75% of those are bearish, which are showing extreme optimism. And when you get above this level right here, the market is negative per annum. So again, this is not a sell signal. This is a warning as if we run up to sell into strength and to sell your extended stocks. And again, don't get worried that you're going to get caught in some type of decline. We have sidestepped every decline since we started Minervini Private Access. And since I've been doing this going way back, for 30 years, I haven't been caught in a bear market, not one single time. So we're going to get our sell signals, whether it's on our models, on individual stocks, we're going to hit stops, and you're going to be, moved into cash. Again, this has happened time and time again, even in the flash crash. I know I talked about this recently. Even the flash crash, which was supposedly out of the blue, I was in 100% cash days before it ever happened. And then you go back and you take a look at 2000. This is the type of situation that I think is going to end up unfolding and I guess it's a little bit off the page here. Huh? Is it? Whoops. Let me go back to that. Sorry about that. Just hit. I hit one button and the whole thing went crazy here. Let's see. Pull this in. That's a little better. You can read that if you want. So in 2000, in 99, I started getting bearish. Then the market rolled over and I really saw a big crack in the key leaders. And the first crack was in the internet stocks, the .com era. Those started blowing up. Dr. Coop was a name back then. If you remember, you're that old and were trading back then, they went bankrupt. And I went on all the TV stations and said that we're gonna go down big here, and these stocks that have run up are going to be down 50 to 80%, which is the 50-80 rule. That's all. And then again, we came off those highs and had a pretty big decline in the Nasdaq, and Microsoft and Qualcomm and EMC and all of these favorite stocks that were sort of like the Amazons. They were the FANG stocks of those days, the Googles. And everybody thought it was a great buying opportunity. And it was short term. Market rallied a bit and then it rolled over and everybody kept buying these dips. And then, of course, it became the dip that stopped dipping and ended up those stocks were down on average 80 to 90%. And many of them, if you go look at the charts of stocks like Microsoft that topped in 2000, didn't come back for 15, 20 years. Cisco still hasn't, I think, come back to even. Again, at some point, this is going to happen. And the Amazons, the Googles, the Netflix are going to be the names that are going to go down 50 to 80%. The 50-80 rule, they will not be immune at some point. So the main thing is they always keep that in the back of your head that, you stick with buying the strength and cutting your losses and you'll be fine. But don't get complacent. A lot of people are I go on Twitter and I hear people say, oh, well, Amazon's never going to go down. A guy just bet me on Twitter that Amazon wouldn't go down 35% off its highs in the next 3 years, which I think is virtually a guarantee that will happen. But we actually made a bet on Twitter about that. I said, yes, it would go down. Anyway, so stick to what's working. Sentiment right now is a red flag to nail down profits that are extended, but this could go on. Be selective, be incremental, use low risk entries as usual, progressive exposure. Don't force trades. Wait till the trades to come to you. If things are working great, you can press it. If not, hold off. And the main thing is no big losses. I'm going to talk about that in a second. How I've definitely choked off some trades. And I guess I can just segue right into that right now. LAD, JD, EGHT, PIN, Snap, even PayPal and that half position. I've choked some of these off. There's no doubt, but my appetite for risk is getting less and less as we're getting extended here. And I'd rather have more chances to get it right than to take bigger losses. So, you don't have to, you certainly could hold these stocks if you want to hold them a little bit more, give them a little bit more room. That's fine. You'll do a little bit less trading. but again, I know I'm moving pretty quick in a lot of things, and but just trying to make an adjustment for what I think is more of a trading environment right now. Like I said, still seeing a number of names though that are doing well. Yeah, I'm de-risking trades very quickly, and again, something like KZ. Let's bring up KZIM. Is a very speculative stock that. Oops, I'm sorry, KZIN. Let's bring that up. What am I doing? Am I losing my mind here? KZIA. Well, I can't even remember. KZIA. All right. Sorry about that. I don't know what I'm thinking. I'm not thinking. So KZIA, this is a situation where it's so tight. It's such a perfect little setup, but it is deep. It does have a lot of issues as far as being something that I would say is a real quality base, but definitely something that I thought could pop fast, and could be a trade. And you never know. Some of these that I think could pop fast and could be a trade end up blasting off and doubling. So you really just don't know. But the strategy for playing some of these, especially if they're highly speculative, $10 stock, you get the stock to run up and you're up 10, 15, 20% in one day. Sell half of the stock. Now if you've got an 8% stop on it, you've financed your stop. If it stops you out, you break even or make some money and move your stop to break even. You guarantee yourself a profit. Just be a little less greedy, and at least you're not going to get yourself into any trouble. So again, you can play it multiple of different ways, but that's the way that I've been trying to address this market and show you how to de-risk these trades as they break out. You get some of these names like a DDOG, which back to a lot of these names squatting. They come out and then they squat. Of course, this came into a little bit of overhead supply, but something like a DOCU, which is on buy alert again this week. I should wait on that, but this is really a perfect base. I mean, this is setting up big base, tightening up really nice on the right side, volume coming way in, already in this, but if it breaks out from here, you could still initiate a position or a pyramid up on this type of position. That looks really good. Let me get to, seeing as we're on that, let's get the buy alert. Let's look at the buy alert list here. And then maybe I'll handpick a few names that are open we can talk about. Churchill down, CHDN, I'm sorry, I'm dyslexic today. Tried to buy this coming out here on that outside day. So far, it's fine. And if we can get into new high ground, get that reversal recovery, that'll be very bullish. Already in, but again, if this should tighten up a bit here or stage a reversal recovery, if you haven't bought it, you could still buy it. DKNG, forming a really nice base. I mean, a large base with, it's got a number of characteristics that I like. Number one, you've got a lot of contractions. Number two, you've got a shakeout here. You've shaken out that previous low. It looked like right here, that was where it was set up perfect. And then you had a pivot failure here, but now it's resetting. So that's great. That's just that, ringing out that supply. On the right side here, you see the volumes coming in. So it's really starting to look, better and better here. A move above 54.45. If you haven't already bought it, you could buy it there. I talked about DOCU. I'm just going to go down the list in alphabetical order. This may change, of course, by the time we trade, Monday. So here, this is a bit more speculative, I think. But again, tightening up here on the right side, if you can get above that 3101, which I pointed out last week, that's tradable. Something like an IIPR. It's a small base, but it's holding up quite nicely, very powerful. You've had some powerful moves moving up here. That's another one looking for it to tighten up. JD. Now, so here's one where I did choke it off. Tried to get in it right here. It came in, got out quickly, and now it just came ripping back. I'm sure that for those of you that sold it, that might have hurt, but it doesn't faze me in the least, to be honest with you. But just another trade. But it's holding up here. It's tightened up for a few days. Probably not going to trade this one, but it does look very strong. This LCUT, another one where very tight, and again, it's just a flat base here. Moving up here on Friday. So that's on buy alert. LOB, bank stock, first time pulled back to the 50, maybe by a pullback buy turning up. It's been very powerful, high alpha. I generally stay away from bank stocks. MED. So here's one that came up right here quite nicely. has moved back a little bit of volatility, and now you're just pulling back for a few days here, coming right to the top of this, what I would call a cap type pattern. So that is maybe one that I may think about adding here. MRSN, this is on the short list. Had a big break here on the biggest volume, and now you've had that rally back. This really looks pretty poor, and so that's a short alert. MRTX. So again, this is much more creative, and I'm going to watch it. This is about as low cheat as you can get. Again, this is one that I would not buy my whole position. Let's see how this plays out. Maybe a few days go by, it tightens up, but above that 219.05 would be the pivot there. NET is a small base here, very tight on this right side. This is one that we bought back here, if you remember. So I might take a stab at this. It pulled back to the 50 here for the first time, and now tightening up. Volume has come in quite nicely. A really tight little pivot. OPEN, open. Another one where you're setting up a pretty nice little base here. You got a base on base, tightening up. This right side needs a little bit more work, but that's looking interesting. And REPL is another one where you've got that low cheat. This was one that came out like a rocket here. We tried to get in it. It was, jockeying for position, went all over the place in this stock. It was volatile. Now you've got this cheat area setting up here, so we'll keep an eye on that. And the SGC is another one where, you came up real nice here out of the bottom of the base, has tightened up, tried to come out here a few days ago, squatted. So again, we'll watch for a similar activity like we saw in the CHDN to see if we can tighten up and get a reversal recovery on that. Shen, we have short, of course, and I think it had a good update on Friday, but still looks like a pretty good short. This is basically, I'll just bring up, where the heck did that chart go? I lost it. Hold on one second. I don't know what's going on here. Okay, there we go. Yeah, this is a ledge where you break down and then you just sort of go straight sideways, moving averages roll over, and then you've got that ledge on the weekly, and then you've got a little mini ledge here forming on the daily. So again, this is one that on the short side, I like to short in a bear market. We're in a strong uptrend. It's really tough. You can see I've not done well on shorts. I don't generally do well on shorts unless we're in a bear market. So I would take this with a grain of salt. But again, if you want to take a position, or if you already took a position in this, it looks pretty good. If the market was negative, this would look like a perfect setup. Shop is another one that really, again, this is one that we're in, but I scaled out of it, bought some here and here, scaled out of it into the rally, and then since then we've now built this cap pattern, just sitting on top of the base, sort of a little mini base on top of base. You got that reversal again. I'd like to see it come to this tight area, get through to get that reversal recovery. This is one again. If you haven't bought it, you can buy it if it breaks out. If you scaled back on it like I have, we can maybe add it back. So I might be adding this back and rebuilding the position. Let's see here. Spot is another one where this came ripping out here. If you remember, I was in it. Came back a little too excessively. Again, might have choked it off too quick. Had to stop below this low, and you'd still be in it. If you just held with that stop, you'd still be in it. So I definitely choked off some of the trades. But now, if this tightens up a bit over here, again, looking for the same thing where we can break out, get a reversal recovery. One that I'm watching, and this TA I've been watching a little bit for a little while, trying to tighten up over here. Not my favorite, but something worth watching. Now, I got a pretty good watch list, a good number of names on the watch list. I'm not going to go through them, but on as far as the open positions are concerned, I mean, some are acting really well. Most of the ones that are acting really well, the ones that we've pared back on and have just partial positions, something like a GNRC. But again, if this runs up from here, I'm just selling right into the strength. We're up 20% on it now. On this final piece, something like an AMBA, we're up 16% on it, a little better than 16. You run up from here, you sell it into the strength. DKL, I still think this might be in the earlier stages because it's an early turn. It's acting really well. I really don't want to sell this one, but I got into this sort of like, oil stock, early turn. I felt like, if I made a little profit on it, I'd sell it. And, it's gone up pretty good. So I just stuck with that plan, but it looks great. PayPal, I probably choked off too quick on that added position. Bought it back here, then added to it over here. Got knocked out on that one little pullback, and since then it's trying to get to new high ground. PayPal looks really good. So again, this is one that I may add back. ANF, another one that's acting great. We're up 12% on the remaining shares. You got a cheat area, pull back to the cheat, breakout. I'm sorry, low cheat, pull back to the low cheat, breakout from a cheat, and now you're forming this little high handle, staying nice and tight. This could be in the early stages as well. Um, let's see, what else? What else? Just going through some of these names that we have open. DKNG, of course, we talked about that. Just trying to see what else is acting pretty well. BLD is acting pretty good, along with yeah, that's acting fine. Something like AOSL's also acting pretty good here. This HGEN, a friend of mine has been watching this for a long time. He owns it like at $1, and he's been talking about it for the longest time. It finally, and it doesn't matter. I don't care, who tells me about a stock. I'm not gonna trade it unless it meets my own criteria. And then finally, it met my criteria coming through here. A stretch, of course. It's a pretty big decline. It's pushing the envelope a bit on a power play, but did get a pivot here. So bought some. It's a COVID play. If it high risk but very high reward play. Again, de-risk the trade, runs up, takes some off the table, and now you're free rolling. That's sort of how I'm playing many of these right now. Let's see, anything else to talk about here? I guess that's it. Just monitor the platform. Look, if this has been a great market to short-term trade in. Especially stock breaks out, runs up. You sell some, you cushion yourself, and then you can play it for a bigger move, and you've de-risked it and taken out the risk for the stop risk. That's how I would recommend playing a lot of these. And again, I think we're in much more of a trading type mode as far as what you should be expecting in the market, as opposed to coming out of a bear market. You want to be more thinking more of an investment type mode where you're sticking with a name, and you might let it go until it has a close below the 50-day, because they can go in an extended period. But now, being up so much, and later stage with such bullish sentiment, I don't think you want to hold on to stocks as long here. And when you get a chance to make some money, you take it, because with the whipsaw action and having a lot of stops hit, you've got to make up for that. If you're getting clipped on stops more often, well, then you got to take profits more often, or you got to have bigger profits. And the problem is, we're seeing the upside has really been limited compared to maybe going back, how it was mid-year. So again, you're always thinking you got to make up for whatever discrepancy you have in your trading. If your batting average is lower, you need to tighten things up. You need to tighten up your stops. You need to, make up for that. When things are going really well, that's when you can loosen up a bit and give your portfolio, give your stocks a little more room, because you get bailed out. So just make those adjustments. You should not be buying everything blindly. You buy a few names. If things are working great, you add. But again, you don't want to be diversified all over the place. You want to be concentrated. But being concentrated has risks, so you have to be incremental and make sure that you're not stepping on the gas when things aren't going so well for yourself. So anyway, I'll talk to you guys soon, and if you have questions, of course, we'll have the Q&A session where you can we'll have Bob and Mark Ritchie. I don't know if I'm going to be popping in or not. We'll see. Depends how things are going. But talk to you later. Right. Bye bye.